we've already had a pretty decent bounce pre-market. Market was gapping lower. Ideally,
French finance minutes are saying.
we would have it opened closer to 274. Easier trade in that area there. But what we do is after the initial event, the down move, and we shift our gears from focusing on in-play names to the market, is we make small tweaks each day moving forward from there. It starts with after the event, we continue to look for huge volatility, and we tend to look for the narrowing. We talked about in Friday's morning meeting, let's see if we can compress to a $4 to a $6 range. And it even looked like right on the open, we might have trouble doing that. But we did. In the middle of the day, we showed some weakness, took out 274.5 and flushed almost down to 272. And so we got ended up being about a $5 range from low to high here. And so right in the middle of what we were looking for. We'll look for something similar again today, $4 plus or minus a point. Best setup, technically, for a multi-day move would be we kind of settle down in a nice range today and then maybe one more day, and then we break to the upside or the downside. Either way, it'll be a nice trade. Downside may be a little bit easier, but either way, that would be a nice trade. But in the meantime, other than those kind of bigger picture setups, we want to continue to be very flexible and move in and out quickly intraday. So let's see where we were on Friday. Okay, so on Friday we failed right on the open 77. We came back, we did a retest, new low, lower high, and then when we took out the morning support, we had a pretty significant pullback. So this was an intraday technical setup, and the opposite would have been if we held up here and broke and took out this 277. We'd be looking for that upside to 278 to 279 where we topped out the day after the big down move. End of the day, the most money was made short volatility. The other thing is that we've talked about is, remember, volatility is going to be mean reverting. And so since we were on day 3 here, it had been up quite a bit the prior 2 days. If you were looking for the bounce, as guys were into the close, and it finally took out this 274 and 50, shorting VIX or UVIXY, it really juiced, even though this was a nice size up move. If we compare it to the size of the down move from this 37 area, remember we had shorted here originally. I don't remember, was it the first move or the second one that I shorted here, but I definitely call one of these moves from 37. That went from, on a percentage basis, just a much bigger move than the SPY. You can see 37 down to 34. I actually went all the way to 33.70. So it's almost a 10% move versus, kind of less than a 1% move in the SPYs. So you can kind of, it's very clear that you can see that, 75 to 76.5 kind of leaked there to 77. Not as much bang for your buck. And if you compare it to UVIXY, let's see what UVIXY did. So UVIXY from 59 to 52. So you got a lot of bang for your buck on that. So because of if you're looking for a bounce in the SPYs, day 3, day 4, day 5, and then the VIX is still elevated, you just get a lot more bang for your buck. And I'm talking about this in terms of just for your preparation now, but I know a bunch of you are newer to this, and my expectation is you're going to be very cautious when we switch to this type of market. But I want you to be very prepared for the next time. And it'll happen. Usually we get a couple of these 1 to 2 times like this per year. And since traders will generally make 5 to 10 times their normal type of money in this environment, I want you guys to learn this. And the top traders and the top firms really crush this sort of time period. So VXX for today. Let me just go back to the SPY for a sec. Let's get the prices in here. So SPYs, we have 276, which people have been sold twice already in the pre-market. Could fail there and roll over, come down to 275 or so, put in a higher low from the pre-market. It would look something like this. Or we could test this resistance from Friday first. We'd go like this, Then if we do that, if the first move is up, we want to see does it support here in the 76 area, the high 75s. Be prepared for either direction, and this is kind of our starting working prices is 74 to 77, high 76s. And we continue to look, here's the bottom, here's the higher low, here's the higher low in the pre-market at the London Open. We put in another higher low at the actual Open. Any type of closes in this area up here for the next couple of days would be a very good setup. Just we get tight and then we break to the upside like that, or we break to the downside like that. That's going to be a good potential larger move. All right, VXX. So let's zoom in. So if the market sells off in the open a little bit, a spike to this area here where it broke down, had the big down, second down leg into the close. That's interesting to me. Right here, what I put on the sheet. Yeah, there was a bunch of different levels. So I thought this area, then I also put 35.50 on because if you zoom in on Friday, like it was 35.40, I guess, technically, where this one started from. It's right here. And then if it's really going to revert today, move to lower prices, if people think the market's stabilized. And this will probably happen if the market starts to rally pretty quickly on the open. It could just fail into this 35. And then we're just looking to see if it'll support down here. And if it supports here for a while and tries to rally back and then puts in another lower high, something like this, then we'll have sort of like a trend down. Maybe eventually work its way down to like 32 or so. Qs. So Qs were the strongest sector, I thought, on Friday. You can just see that if you look at it from like the price action on Thursday versus Friday. So here was Thursday morning high. Here's the flush through 170. It was pretty vicious. We came in the next morning, it gapped up. It did come off at the market overall, but spent most of its day, most of its prices for Friday were above this range from Thursday versus like in the SPYs. That's not the case, right? Like the SPYs really was just basically was in the same kind of price range from 11:30 to till the close. So you kind of just see that pretty clearly on a multi-day. And so we closed above the morning high there. So we gapped down a little bit, same thing as the SPYs, gapped down earlier. On day one, not day one, after the big down move, we were looking for a bounce to here. I'm going to pull that out. So I'm going to go with 72. This is 75. Okay. This is kind of my work. This is the working range I'm starting with here. A roll over to 72 to 72.50. This is an interesting spot to me. See if it catches a bit there. And any type of close above 75 today would start to be pretty constructive. So you can see the beginning of the down move was 78.5. And then it came in, it consolidated middle of the day between 75 and 76 and change. And then that final down leg on Wednesday was from 75. So this, I would expect some sellers. If tech is strong this morning, you want to watch the Qs into 74.80 to 75. I would think that would be a spot where people would start shorting it, hedging off some of their risk in technology by selling into this. Let's see. I'll zoom out a little bit more. Yeah. And so you can see in this pullback here in the end of July, this also 75 was a very important support when it had topped out here in the 80s. So it's 75 is going to be a big level. We'll use that to judge the overall strength today and tomorrow. Buck from there right now, down 40 cents from from Friday's close. So we did Qs, we did VIX, we did SPYs. I didn't. So the balancing act for me is we're now entering the big part of earnings season. Like this week and next week are going to be very busy. Yeah, I'll talk about IWM in a second. And what we do is after the initial big down in play, just do SPYs, Qs, VIX, and all the other ETFs related to those. What we're emphasizing on the desk, and day 2, day 3, even today, day 4, is stick with these. I know at the end of the meeting somebody said, "Oh, Wells Fargo, JPM," and I just totally wasn't even thinking about them. I knew they had reported, and JPM turned out to be a really nice short from 110. But the opportunity set we know is going to be in there in the volatility in the market ETFs. And as I said, they're generally leading. Certainly JPM was obviously much weaker than the market, and that works fine. But we want to default to the indices themselves, and we want to default to volatility. There's just so much liquidity there. They're really moving, and you can get in and out, and you can capture usually 3, 4, 5 pretty good scalps. That would be the equivalent of an intraday trend trade from a month ago in those names. IWM has been just weak for 2-3 weeks now. It hasn't really shown any signs that it's going to go back up. So here was the initial downtrend. It has accelerated away from that, so definitely could say it's due to have a bounce back into the downtrend. I thought when I was looking at it on Thursday, I felt 56. Is that what I was looking at? 56. I think that's what I was thinking that we could at least get to. 158. And by the way, if it does have a bounce today or tomorrow, it starts to show strength, it can start holding in this area here. Then you can look. I think ultimately move back to 60. And that would be like a really nice potential failure area. It's just overshooting. It always overshoots to the upside, overshoots to the downside. Remember this one? This was so vicious from 160. Again, this is why I think ultimately if we could start to bounce and get a move back to 160, this is a spot where you would think that people would want to sell the crap out of it. It's very messy in this area here. You can't really, I guess it's 151. Yeah, it's almost there. So watch, so the low was on Friday, 152. Let's see if where is it right now? It's right above it. It's about $1 above it. If it came into here, then started doing some sideways action, you were long it, and you got to close above 54. You might be able to catch this move. Bounce there. Yeah, I just explained that. All right, as always, be patient and good luck.